Welcome to the Skilled MBA Case Study Series. At Skilled MBA, we explore real-world business lessons that shape industries. In this edition, we present GoFirst's Airlines, a cautionary tale of strategic decline, a deep dive into the airline's journey from profitability to crisis. Through this case, we uncover the strategic missteps, operational challenges, and external pressures that redefined its place in India's competitive aviation market.
GoFirst, once a profitable low-cost carrier, faced a dramatic decline due to strategic missteps and operational inefficiencies. External factors like rising fuel costs and intense competition compounded internal issues such as poor management and fleet utilization. By 2023, these challenges culminated in a financial crisis, threatening the airline's survival in the competitive Indian aviation market. GoFirst, established in 2005, operated as a low-cost carrier in India with a fleet of 54 aircraft. It served domestic and select international routes, competing with Indigo, SpiceJet, and Air India. Despite initial success, by 2023, GoFirst faced a severe financial and operational crisis, threatening its operations. GoFirst, established in 2005, emerged as a low-cost carrier in India, operating 54 aircraft by 2023. It targeted budget-conscious travelers, competing with Indigo and SpiceJet and full-service airlines like Air India. Despite early success, GoFirst encountered a financial and operational crisis in 2023, threatening its operations. The Indian aviation market is fiercely competitive, with carriers like Indigo, SpiceJet, Air India, and Vistara vying for dominance. Price sensitivity among consumers pressures margins, while complex regulations and high entry barriers challenge operational flexibility. Airlines must strategically balance cost management and service quality to stay competitive in this demanding landscape. The COVID-19 pandemic severely impacted revenue with travel restrictions, causing operational disruptions and cash flow issues from refunds. Passenger confidence in air travel plummeted. Rising fuel costs further strained operations, with fuel accounting for 30 to 40% of expenses. Limited hedging capabilities made it difficult to manage these costs, especially with price-sensitive customers. Aggressive fare discounting by competitors like Indigo and SpiceJet eroded GoFirst's profit margins. Rapid fleet expansions by rivals provided them economies of scale, while strategic route monopolization limited GoFirst's profitable options. This competitive landscape forced GoFirst to operate with thin margins, struggling to differentiate in a market driven by price-sensitive consumers. Operational inefficiencies plagued GoFirst, with suboptimal fleet utilization and inefficient route management. Aging aircraft led to higher maintenance costs, while legal disputes with lessors threatened aircraft repossession. These issues drained financial resources and damaged key partnerships, exacerbating the financial and operational challenges faced by the airline. Declining on-time performance is eroding customer satisfaction and increasing operational costs. Inconsistent service delivery during disruptions further impacts passenger experience. Negative reviews and social media feedback are damaging brand perception, while maintaining customer loyalty is challenging in a competitive market. These service quality issues exacerbate financial and operational difficulties. GoFirst's financial trajectory reveals a significant decline starting in 2020 due to the COVID-19 pandemic. Although there was some revenue recovery in 2021 to 2022, losses persisted, leading to a critical financial crisis by 2023. This situation underscores the urgent need for strategic interventions to stabilize and improve financial health. To dissect GoFirst's challenges, we employ 4 analytical frameworks: S, W, O, T analysis to assess internal and external factors, SERV, QUAL model to identify service quality gaps, Porter's 5 forces to evaluate competitive pressures, and financial analysis to track revenue, profitability, and costs. These frameworks provide a comprehensive understanding of GoFirst's strategic landscape. GoFirst's strengths include strong brand recognition in India since 2005, a modern fleet of 54 fuel-efficient aircraft, and strategic market positioning as a value carrier with premium elements. Additionally, its route network covers key metropolitan markets and profitable international routes, providing a solid foundation for potential recovery strategies. GoFirst faces operational challenges with lower fleet utilization and higher costs compared to competitors. Inconsistent on-time performance and limited tech integration further hinder efficiency. Financially, a high debt burden, limited cash reserves, and weak supplier bargaining power exacerbate vulnerability, especially with insufficient fuel price hedging. Opportunities for GoFirst include tapping into the growing middle class and increasing air travel demand, exploring strategic partnerships, and serving underserved regional routes. Digital transformation can enhance efficiency, while post-pandemic recovery boosts demand. However, threats like fuel price volatility, aggressive competitor expansion, regulatory changes, and currency fluctuations pose significant challenges alongside potential future global disruptions. The ServQual model highlights GoFirst's service quality gaps. Reliability issues arose from frequent delays and cancellations. Responsiveness faltered with slow customer service during disruptions. Assurance weakened as staff struggled to maintain confidence. Empathy declined due to financial and staffing pressures, while tangibles suffered from cost-cutting, affecting facility maintenance. Porter's 5 Forces analysis reveals intense competitive rivalry in the airline industry, with major players like Indigo and SpiceJet. The threat of new entrants is moderate due to high capital needs, while substitutes like rail and digital options are growing. Supplier and buyer power are high, impacting pricing and profitability. GoFirst's cost structure is heavily impacted by fuel price volatility, accounting for 38% of expenses, and aircraft leasing costs at 22%. These two categories comprise 60% of total costs, exposing the airline to risks from fuel price hikes and currency fluctuations affecting dollar-denominated leases. GoFirst's 2023 net loss of 2,200 crore marks a 47% increase from the previous year. The load factor at 68% is below the industry average of 82%, indicating underutilization. Revenue per available seat kilometer is Rs 4.2, down from Rs 4.8 pre-pandemic, while costs are Rs 4.9, leading to negative unit economics. GoFirst faced severe revenue disruption due to COVID-19, compounded by inadequate cash reserves. Rising fuel costs without hedging strategies and competitive price wars eroded margins. Operational inefficiencies and legal disputes with lessors further strained resources. Declining service quality impacted customer retention, creating a cycle of challenges leading to near bankruptcy. The pandemic led to a 91% revenue drop during lockdowns, while fixed costs for leases and maintenance persisted. Cash reserves were exhausted within months, and staff reductions impacted service quality. Unlike competitors, GoFirst failed to capitalize on cargo opportunities and was slow to adapt to evolving travel protocols, exacerbating existing vulnerabilities. GoFirst missed leveraging its brand recognition for differentiation, failing to optimize routes by focusing on profitable segments. Strategic partnerships, like codeshare agreements, were underutilized, limiting network reach. Additionally, digital innovation was overlooked, hindering operational efficiency. These missed opportunities prevented GoFirst from effectively mitigating threats and capitalizing on market opportunities during and after the pandemic. Strategic recovery initiatives focus on financial restructuring through debt renegotiation and potential equity infusion. Operational optimization involves rationalizing route networks and standardizing fleets. Enhancing service quality through staff training and digital tools is crucial. Strategic repositioning requires clear market positioning and exploring partnerships or mergers to strengthen competitive advantage. Implement robust service recovery protocols with empowered staff to handle disruptions effectively. Standardize service processes for consistency, allowing personalization. Enhance loyalty programs with meaningful rewards to foster repeat business and emotional connections. Reposition the brand by clearly communicating a value proposition that emphasizes reliability and customer care beyond just pricing. Risk management in aviation requires maintaining cash reserves, effective fuel hedging, and diversifying revenue streams. Strategic agility involves monitoring market conditions, differentiating from competitors, and balancing growth with financial stability. Investing in digital capabilities enhances operational efficiency. GoFirst's challenges highlight the importance of these strategies in volatile markets. SWOT analysis reveals how internal weaknesses can amplify external threats, compounding challenges during disruptions. The ServQual model shows service quality gaps widen under financial pressure, affecting loyalty and revenue. Porter's 5 forces highlight intensified competitive pressures during downturns. Financial analysis indicates high fixed costs increase vulnerability during revenue disruptions. These frameworks offer insights into complex challenges in dynamic industries like aviation.
GoFirst's operational and financial weaknesses were exacerbated by COVID-19 and fuel price volatility. Maintaining service quality is crucial for brand equity and customer loyalty. Strategic agility is vital for adapting to market changes. Proactive risk management, including contingency planning and diversified revenue, is essential for airlines to withstand industry disruptions. Thank you for learning with Skilled MBA. We appreciate your time and curiosity in exploring this case study. At Skilled MBA, our goal is to make business education practical, insightful, and impactful for students, professionals, and entrepreneurs worldwide. Stay connected for more in-depth case studies, actionable insights, and tools to elevate your business expertise. Mobile, +91 87 553 00795 mail, support@skilledmba.com. Website, https://skilledmba.com.